Hello, everybody. Welcome. Thank you very much for joining. Let's get started right away. Dow Jones is up 0.3%. NASDAQ is down 0.1%. S&P 500 is flat. Russell 2000 is flat. So basically, indices are flat today. Some mixed. Some companies are up slightly, down slightly. Nothing really sticking out. We're probably going to keep it short today. Today, we got the advanced international trade in goods for March at a very high $160 billion as companies are accelerated their imports into US to be ahead of tariffs. Consumer confidence for April was lower than expected at 86, lower than the expected 88, and much lower than the prior 94. So consumer confidence plunged in April as we would have expected. Advanced wholesale inventories increased in March. I'm increasingly convinced that the economy was already weakening at a very rapid pace throughout Q1. And in April, it took a plunge. Things took a plunge. Oil prices are slipping below $60 per barrel right now. And the yield curve across the curve is down about 5 basis points. Next week, the Fed will meet and talk about interest rates. I don't expect a rate cut next week. I think the probability is near zero. The markets are still expecting a bit of a 10% probability for a rate cut next week. I think they're going to be surprised. And then June, markets are expecting 2 in 3 market participants expecting a rate cut by June, which I don't think is going to happen either, the way things are going with inflation. We're starting to see some impact of tariffs on prices in the US. So I think the inflation impact is going to start appearing in April reports throughout May, but then accelerate throughout Q2. So we're not going to see the full impact until next year. I think the idea that tariffs are deflationary is ridiculous. Let's read our article real quick. We're going to keep it a short day today. Any questions, comments, you may leave it in YouTube live chat or just a reply or come up request to speak. Let's do this quick reading of the Reuters article. Wall Street choppy as markets juggle trade war news, mixed earnings. Wall Street's main indices moved higher in volatile trading on Tuesday as a mixed bag of corporate earnings, soft economic data, and fresh developments on US-China trade front kept investors on the sidelines. US Secretary Bessent predicted China could lose 10 million jobs quickly due to tariffs. Well, that's not really that many for a country of that size, and how the hell would Bessent know? But signaled progress on trade deals with other countries, including Japan and India. The world's 2 largest economies have slapped tit-for-tat import tariffs on each other, and uncertainty around the state of negotiations between the two has kept markets on edge. There is still some optimism around what will likely be deals with India, Japan, Australia, and South Korea, but talks with China will likely be the last pin to fall, said Patriarch Organization CEO Eric Schiffer. A day after US officials said the Trump administration will move to reduce the impact of automotive tariffs, shares of Ford were only marginally higher and Tesla fell 1%. Blue chip Dow got a boost as Honeywell jumped 5% on reporting a rise in adjusted profit for the first quarter. Paint maker Sherwin and Williams gained 5% at its quarterly profit beat estimates. However, GM fell 1.6% after the automaker pulled its annual forecast due to tariff uncertainty. The day's data releases also pointed to increasing murky economic outlook. The Conference Board's Consumer Confidence Index dropped to its lowest reading since May 2020. While job openings came in at 7.2 million in March, below the estimates of 7.5 million. There's now 1.02 job openings per available worker looking. We're just in this eye of the storm for a lot of investors, consumers, and business leaders wondering what the future looks like as potential tariffs kick in down the road, said Matthew Stuckey, Chief PM at Northwestern Mutual Wealth Management. More economic data, including non-farm payrolls, is expected this week, and results from many of the Magnificent Seven group of mega-cap stocks are also due, with investors hawk-eyed on any signs of tariff impact on their outlook. All 3 major indices remained down for the year, despite the S&P 500 logging its best winning streak since November on Monday. HSBC became the latest brokerage to trim its year-end target for S&P 500. Coca-Cola rose 1% after beating revenue and profit estimates, while UPS edged a little bit after its quarterly results. UPS also announced that they're going to cut 20,000 jobs throughout this year globally, which is about 5% of their number of employees. Wells Fargo gained 1% after announcing a stock buyback program up to $40 billion. And that's about it. I don't really have anything else to discuss. Job openings data was much lower than expected. Consumer confidence was also lower than expected. And I think the housing market is turning downward now as well. So home price at peak should be declining here. On that note, thank you very much, everybody. And I will chat with you all next time. Take care.